Welcome back to the Daily Crypto Roundup. Bitcoin is back above $70,000. Markets are flipping risk on again, and suddenly the narrative has changed almost overnight. But under the surface, there's something much bigger going on here. You've got Mastercard making billion-dollar moves into crypto infrastructure, Kraken quietly hitting the brakes on its IPO, and one of the biggest crypto companies in the world cutting staff to go all in on artificial intelligence. This isn't just another day in crypto. This is a shift in how the entire industry is evolving. And just quickly, this episode is sponsored by NordVPN. If you're in crypto and you're not using a VPN, you're honestly leaving yourself exposed. Whether it's protecting your wallets, securing your logins on public Wi-Fi, or just keeping your data private, it's a no-brainer. NordVPN is one of the fastest and most trusted out there, and it's what you should be using if you're serious about security in this space. Check out the link in the description to get started. Okay, let's break it all down. We're starting with Bitcoin because that's where everything begins. Bitcoin pushing back above $70,000 isn't just a random pump. This move is directly tied to macro events, specifically the sudden cooling of geopolitical tensions. When news broke that potential military action involving Iran was being delayed, markets reacted instantly. Oil dropped, gold pulled back, and risk assets surged. And right now, crypto is firmly in that category. What we're seeing is Bitcoin behaving less like an isolated digital asset and more like a high-beta macro instrument. It's reacting to global liquidity, geopolitical risk, and investor sentiment in real time. That matters, because for years, Bitcoin was pitched as a hedge, something separate from the traditional financial system. But now, the data is telling a different story. Bitcoin is increasingly moving with risk assets, not against them. And that's not necessarily a bad thing, because when the macro environment turns positive, when money starts flowing again, Bitcoin becomes one of the biggest beneficiaries. This is exactly what we're seeing right now. Institutional flows are starting to re-enter, sentiment is shifting, and traders are beginning to position for another leg higher. But here's where it gets interesting. Even with this price move, the underlying sentiment hasn't fully caught up. There's still hesitation in the market. There's still caution. And that creates opportunity. Because historically, some of the strongest moves in crypto happen when price starts rising before sentiment flips. That's when you get those explosive runs, when people are forced to chase the market higher. So the question now is simple. Is this the beginning of the next major move, or just a short-term reaction to macro news? To answer that, we need to look at what the big players are doing. And that brings us to Mastercard. Because while retail traders are still debating whether this rally is real, Mastercard has already made its decision. They're going all in. Mastercard is reportedly acquiring crypto infrastructure firm BVNK in a deal worth up to $1.8 billion. And this isn't just another corporate investment. This is a strategic move to integrate crypto directly into global payment systems. What BVNK provides is critical infrastructure, the back-end rails that allow stablecoins and digital assets to move seamlessly between traditional finance and blockchain networks. In simple terms, Mastercard isn't just dipping its toes into crypto anymore. They're building the plumbing. And this is where things start to get very serious. Because when a company like Mastercard commits this level of capital, it's not about short-term gains. It's about long-term positioning. It's about making sure they're at the center of the next financial system, not left behind by it. Think about what this means. Stablecoin payments integrated into everyday transactions. Businesses accepting crypto without even realizing it. Cross-border transfers happening instantly, without the need for traditional banking intermediaries. This is the future Mastercard is preparing for. And once that infrastructure is in place, adoption doesn't need to be forced. It happens naturally, because it becomes easier, faster, and cheaper than the existing system. Now here's the key point most people are missing. This kind of move doesn't happen in isolation. When Mastercard moves, others follow. Visa, PayPal, major banks. They're all watching this space closely. And once one major player commits at this level, it accelerates the entire industry. So while retail investors are still focused on price charts, the real story is happening behind the scenes. The financial system is being rebuilt. But while Mastercard is pushing forward, not everyone in crypto is moving with the same confidence. Because at the same time as this billion-dollar acquisition, we've got Kraken quietly stepping back. Kraken has reportedly paused its plans for an initial public offering. And this is significant. Because an IPO isn't just about raising money. It's about signaling strength, stability, and long-term confidence in the market. When a company like Kraken delays that move, it tells you something. It tells you that despite the recent price action, there are still uncertainties in the market. There are still risks that major players are not willing to ignore. Now, that doesn't mean Kraken is struggling. Far from it. Kraken remains one of the most established and respected exchanges in the industry. But timing matters. And right now, they've decided that the conditions aren't right. This could be due to regulatory uncertainty, market volatility, or simply the desire to wait for a stronger environment where they can maximize valuation. But either way, it highlights an important reality. The crypto market is still in transition. You've got massive institutional adoption on one side and lingering uncertainty on the other, and that creates tension. Because while some parts of the industry are moving forward aggressively, others are still holding back, waiting for clarity. And that's exactly what we're seeing right now. Now let's take it a step further. Because while institutions are making billion-dollar bets and exchanges are adjusting their strategies, something else is happening inside the industry itself. And this might be the biggest shift of all. Crypto.com has just laid off 12% of its workforce. Not because they're struggling, but because they're pivoting. Pivoting toward artificial intelligence. This is where things get very interesting. Because what we're seeing now is the convergence of two of the most powerful technologies in the world: crypto and AI. Crypto.com's CEO has made it clear that this isn't just about cutting costs. It's about restructuring the company to become AI first. They've even gone as far as acquiring premium digital assets like AI.Com, signaling a long-term commitment to this direction. Now think about what that means. AI-driven trading systems, automated risk management, smart contract optimization, personalized financial services powered by machine learning. This isn't theoretical anymore. This is happening. And while the headlines focus on layoffs, the real story is transformation. Because every major technological shift comes with disruption. Jobs change, roles evolve, systems get replaced. But the end result is usually more efficient, more scalable, and more powerful than what came before. And that's exactly what Crypto.com is positioning for. So when you zoom out and look at everything together, a very clear picture starts to form. Bitcoin is reacting to macro conditions, proving its place in the global financial system. Mastercard is building the infrastructure for mass adoption. Kraken is signaling caution, reminding us that the market isn't fully stable yet. And Crypto.com is evolving, integrating AI to stay ahead of the curve. These aren't separate stories. They're all connected. This is what a maturing industry looks like. You've got growth, innovation, caution, and transformation all happening at the same time. And for investors, this creates both opportunity and risk. Because while the upside potential is massive, the landscape is becoming more complex. You can't just rely on hype anymore. You need to understand the bigger picture. Now here's the key takeaway from all of this. The crypto market is no longer just about coins. It's about infrastructure. It's about integration. It's about how this technology fits into the broader financial system. And the players who understand that, the ones building, investing, and positioning themselves accordingly, are the ones who are going to benefit the most in the long run. Because while short-term price movements will always grab attention, the real value is being created behind the scenes. And that's where the smart money is focusing. So moving forward, here's what you should be watching. Keep an eye on macro conditions. Because as we've seen, Bitcoin is heavily influenced by global events. Watch institutional moves closely. Because companies like Mastercard aren't making billion-dollar decisions lightly. Pay attention to regulatory developments. Because they will determine how quickly this industry can scale. And most importantly, don't ignore the role of AI. Because the intersection of crypto and artificial intelligence could define the next phase of this market. This is no longer early-stage crypto. This is the transition into something much bigger. a fully integrated digital financial system, and we're watching it happen in real time. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.